Is this the calm before the storm? Hi, everyone. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Vincent Deluard, Director of Global Macro for StoneX. Hi, Vincent. It's great to see you again.
Hi, Maggie. Happy to be here.
So everyone, and hi to everyone watching us live on X, Substack, and YouTube. We always hope it makes it everywhere. Drop your questions in the chat, and we'll get to as many as we can. Vincent, and subscribe, please, by the way. Vincent, we saw stocks move lower, oil move higher as this ceasefire peace talks look to be pretty uncertain right now. But you could argue the reaction was pretty muted. It could have been a lot worse, based on what we've seen with the reversals before. What's your sense of what's happening? Why do we see this sort of pretty calm market? Are they still betting that this will be resolved?
Yeah, I share your sentiment. I mean, I thought we would gap lower and then would probably trade lower during the day. No, it's stunning. I mean, the past week has just been one of the best weeks in history. What do we have going on? One is this always fade the geopolitics, right? That's kind of become ingrained. Even though one could argue that this might be the time when it's different. At least that's what it would be. Two, a lot of retail 0-day option. And then the associated kind of effect on the dealer that forced them to chase higher. And then I mean there are pockets like earnings are good. And I mean I'm not arguing that. I think U.S. economic growth. You always heard me say it's stronger than people think. All these recession talks is crazy. So if you think that the war is going to be solved shortly and Trump always chickens out, you're like, yeah, we're still in a pretty good environment for stocks. I just don't happen to agree that it's going to be that easy to get out of it. And even if we do get out of it, I don't think we come back to the status quo ex ante. I mean, we don't go back to $60 oil. We've done significant damage down the chain. If you think about fertilizer, jet fuel, but the market seems to fade everything. I mean, it's a bull market.
Yeah, it's a bull market until it's not. So I think that there's an issue where, I mean, I talked to a bunch of people today and we've been reading people's Substacks, and there is such a disconnect between reality. So I just want to pick up something you said, because I think that I saw a lot of people say, just hold your nose and buy, talking to some traders in the chat, and listen, this is going up. You can understand why, right? Everybody got it right again on this sort of, 14-day run of the NASDAQ and S&P hitting new highs above 7,000. So you can see that the behavior reinforces that. But you just said, even if the war is over, not everything goes back to the way it was. And I think that you don't have to be cast as a sort of doom and gloomer to kind of realistically look at this and say it's an awfully complicated situation. There's a lot of damage that's been done. There's a lot of risk that's still out there. So maybe you don't think things crash, but is any of that priced in? And I feel like a lot of analysts and a lot of sort of money managers and folks who are trying to look at this, even with no emotion involved, just say, I don't get it. Like, I just feel like this is going to roll over, but getting the timing right seems so hard.
Yeah, and I mean, obviously I'm in a more bearish camp, at least on the equities and not so much on the growth. So I share this concern. It's possible you could see it keep going until the summer, right? So let's say we have the chickening out, then we have the China trade deal. Trump wants to kind of change the narrative, have a big, W. So some sort of relief on the tariffs, and then we get into the summer. We have the World Cup, we have the anniversary, and I think that's just what the market's looking at the end of the day. It's like, yeah, is there potential for 5-10% upside? Yes. Now, if we take a longer perspective, I would absolutely agree that what happened is, I mean, that scenario would be basically a geopolitical retreat, kind of like what the British did in Suez in 1956. It would be a lower role for the US dollar. It would be a permanently stronger Iran. There would be a principle that has been said that force makes might, and if the freedom of navigation could come up in other places, there would also likely be a likely U.S. response. I mean, empires don't usually take on defeat with grace, and I don't think Donald Trump is a particularly graceful loser. But again, the market is, I don't think, not pricing any of that. It's just the relief, the strong earnings, and the prospect for and it could be. I mean, that was my idea before the start of the war, was that would have this party like it's the summer of 1999, right? So for the reasons I described, plus you add the big IPOs, I trust Sam Altman to peak the exact top, and we get the OpenAI IPO, it popped 20% on the first day, and then that would be kind of the end of it. So maybe we're going back to this scenario. Again, I think the question for, I mean, at least for the clients I speak to, which tend to be pension funds, they're not trying to time. Plus, there's an element of it that is futile. I mean, you're I mean, it could change on a tweet, on a whim. You have massive insider trading too, which I think really gives kind of a uneasy feeling when you see what's happening on the betting market or on the oil market. So you don't have an edge here. You're just kind of playing blind. And I mean, I guess sometimes it's fun to speculate and good for people who make money. I mean, it's just not necessarily the game that you would want to play if you're like a pension fund and looking at the next 10 years. Arguably, the world is, I mean, this is not going to be a new Middle East, right? The way we're sold it initially. Oh, don't worry, we're going to have like a US friendly regime in Tehran, and everybody's going to recognize Israel, and there's going to be this global infrastructure boom and permanently lower oil prices. I mean, it's the exact opposite of that.
Yeah, I mean, I think so, and I would argue, by the way, that I think pensions funds, yes, like they're trying to look out 10 years, but I think everyone needs to figure out, are you trading or are you investing? Because I don't think anyone wants a big drawdown. I don't care what your time horizon is, unless you're day trading, and you're in a different position, or have a weekly book and you have an account you're doing that with. I think everybody else, you're if you don't want to see your portfolio, significantly hit, I do think you have to think about where the risks are and if you're positioned, because you all can't get out the door at the same time. That's sort of my concern. And I know it feels like I think Kevin Muir had a great quote in his note from someone saying, I'm dancing by the door, right? Because no one can underperform if you're paid to be a money manager. That's really hard. But if you're not, you maybe want to start to position for the world that might look a little different. So let's talk about that. And by the way, Cosmo saying ceasefire ends in less than 2 days. Trump says he's not extending it. Invasion coming. I think a lot of people are wondering whether this was just a pause to get ready on both sides.
That's the part. And again, I don't claim any sort of geopolitical expertise on specific that issue, or specifically the Trump administration. But I mean, if we just look at the pattern, both in Venezuela and in Iran, look at the movement of troops. Don't look at the tweets. Even we've used negotiation as ploys before, as decoys to kind of like gain time. Obviously, the stockpiles are very low, but the troops are still moving towards the Persian Gulf. So that tells me at least we want the option of military escalation. And I would absolutely agree that's not priced in the market. I don't think that the Iranians are as desperate for a deal as Trump makes them to be. I mean, if you follow, by the way, I recommend these Iranian accounts on Twitter. I mean, what
they cannot be real. The minute I see vibe trading digital oil and like using Bloomberg codes, there's no way that's actually the foreign minister. It's got to be a fake account from someplace.
I think I was referring to the Iranian embassies in various countries posting hilarious trolling of Trump.
Yeah.
I didn't know they had such a good sense of humor as Islamic revolutionaries.
We don't even know if it's them, though. Whoever it is having a ball, and they are playing at that game. Somebody said it's sort of like this new theater of war, which is like the meme war. Like, who can outdo each other?
They're winning this one for sure on the meme war. I mean, we're doing the Jesus stuff, and yeah.
Yeah,
But
but
it's, it's
they seem to be winning the hearts and minds, and we're just alienating alienating the base when it comes to. I'm not sure that the White House social media is working as well as they think it is. But very seriously on that point though. So if we're trying to focus a little bit, there's obviously we're all thinking, do stocks all of a sudden gap down and fall out of bed? But you've been focusing on treasuries. In you, and you have a couple of excellent notes out. I just want to touch on some of the highlights so people can go check them out. But you have been highlighting treasuries, and I think you made this really, really important point. We see them trolling that, by the way, in the
yeah,
tweets, right?
yeah.
And it feels like, even though we don't know where they're coming from, that this is new and that the financial markets are very much a target now in this war, and that includes U.S. treasuries.
Yeah. I don't know if we have the ability to show some of the charts from the report, but if you have, I mean, they have two charts. So it's Treasury Standard Dollar Index, because for a lot of the demand for treasuries come from foreigners. And what you see before COVID, in every bear market, every equity market correction, you bought treasuries, you're up about 20%. 10% coming from low yields. Typically, when we had equity market corrections, yield would come down, bond prices would go up, and then there was a bonus 10% from the dollar's tendency to rally, and that's been consistent from World War II to 2022, and then since 2022, we had now this is our third treasury market failure, right? The first one was well, there was actually some hints of that during COVID. If you remember, there's a couple of days, and I think that's kind of when the Fed intervened, when the treasury market. But that was probably the disruption, the traders being at home and all that. Like to me, the real failures were the rate hikes of 2022, when we had an equity bear market, and treasuries had their worst year since the founding of the republic, the Russian invasion, and then the Liberation Day tariffs, and now, so actually that would be fourth. I mean, the Russian invasion and the rate hikes kind of happened together, but this is the fourth market events where we see yields up, or at least not down, and dollar index down. So my question is like, what are you holding this asset for? Like if treasuries, and the dollar cannot rally on the closure of the Strait of Hormuz, like what are they doing in the portfolio? My hypothesis, which I think is correct, is that treasuries serve the same role as the plagues in ancient Egypt during the 10 plagues of Egypt, with when Moses was trying to get the Hebrews out, and then God keeps sending more and more plague to soften Pharaoh's heart. That's the purpose of treasury. Like if you are a country that can be potentially harmed by the US, you want to have some treasuries in order to be able to signal, hey, you keep doing this, you're going to have like 5% yield. And that we saw that explicitly during the Liberation Day episode, right? When as soon as the 10-year and 5-year 2-year hit 5%, Trump said that the bond market's getting yippy, and that got us the pause. Now, how did yields go to 5%? Probably because someone was selling it. Could have been Japan, could have, I mean, you have a lot of these Asian nations with a lot of currency reserves that are, that have that card. And here, same story. Like if you are Oman, if you are the UAE, if you are Qatar, and you need somehow to find a balance, modus vivendi with Iran. I mean, you can try to plead to Pharaoh. You can go and try to reach to his heart, but that doesn't work. What works, and again, it was not as clear as during the Liberation Day, but we had a couple of auctions, even short-term auctions, that didn't go very well, and then we started to see all the treasury curve was above the Fed funds rate, so that effectively the market was pricing rate hikes, which is kind of surprising because the Fed has been extraordinarily silent throughout this, right? You look at the summary of economic projection, it seems nothing's changed. So again, I think it's the way, it's the only resort to kind of stop a bullying U.S. administration from inflicting pain on you. Now, what that means for non-strategic investors, is that it's awful because right when you want treasuries to protect your portfolio, they end up being the tool that through higher yields, hence lower price, influences US policy. So it's the exact opposite of what you would want. They would if my model is right, they would tend to be an asset that actually underperforms during risk-off episodes. And the main case would be to hold it for strategic reasons. If you do not have any strategic reason, I mean, my buying or selling of treasuries will have no impact on the whims of Faro. Then what am I doing? I'm just buying return free risk.
Yeah, and that is not that is no longer a safe haven. So what takes the place? And I can't pull it up, but we will put some in the Substack when we write this up tomorrow. What is the case, or what fills the role then if you're looking for that protection against an equity drawdown?
Well, that's the problem, right? Nothing's. I mean, the treasuries were a wonderful product. You know, if you look at the depth, the liquidity, the fact that it pays a coupon. I mean, I think part of it, I think it's accepting that the world has changed, and it's changed in a way that's somewhat harmful, less favorable to investors.
Mm,
Like, we used to have this wonderful deal where okay, the US would run drawdown deficits, but foreigners would get a safe assets in which they could, safely park their reserves. That asset paid a coupon. It was not a very high coupon, but we had low inflation, so you were okay. And then there was that built-in put option, if you will, which if you look at the excess yield of treasuries, of government bonds versus nominal growth. So you can take that kind of neutral rate view of the world that over long periods of time, yield should approximate nominal growth. And in the case of the US, it was the treasury yields were always a bit lower than nominal growth. And I think that reflected the value of that put option. So it was a good world. The US could finance itself for cheaper. With that, we could run bigger deficits, have a big military, so without really paying for it. The foreigners could park their money, and then if you had a kind of 60-40 portfolio, you were balanced because the half of the Barclays Act that's composed of treasury would behave in a negatively correlated way. So it was a beautiful world, and in some ways it was a corporate. What it reflected eventually, ultimately, was a cooperative world where after World War II and after the end of the dollar stand, the gold standard, everybody went around the table and agreed this is what we're going to do. We're going to have free trade. The US is going to patrol the high seas. We're going to have open capital markets. Savings we want the US accepted to be the consumer of last resort. In exchange, the Asians and Europeans repatriated the savings into it. So that's why I'm going back to this idea that the world is less good, less investor friendly now than it was before. This is unraveling. And to your question, what replaces it? My point, nothing replaces it, because the underlying architecture of that world is gone. Now you could look at second order, and I would greatly recommend people do that, but this was a long preamble to say that nothing is going to be as good because the value of that option ultimately rested in this international corporation that no longer exists. So what are second options? And maybe we can talk a bit. I actually like the yen here.
Yes, you wrote a whole report about this. I will say, talk to us about the yen, but people are jumping in and giving the answer you might expect: gold.
Yes.
And
Gold,
also
Bitcoin,
oil,
gold, crypto, energy stocks.
energy stocks. J&J also said
yen,
with good cash
Swiss
flow.
franc. I would have a little bit of all in there. I think what we see is a process where so it's like a kid who's lost his parent, and then he goes to the moms of the school. So at some point we try. So at some point we'll try crypto. At some point, so go. But again, there will be some level of dissatisfaction with all of them. For example, gold, amazing last year, quite unsatisfactory in March, right? We basically lost 20% gold. Again, not unexpected. I remain kind of a long-term gold bull, and yes, you lose 20%, but you made so much money before, but not that was not great. Also, obviously gold, neither gold nor crypto pays dividends, so none of them are as liquid. You cannot, ultimately you need to convert them back into dollar if you want to do anything useful with them.
Yeah. And then you have the whole spreads and some of the physical limitations. I mean, as you say, that there are some. Talk to us about the yen, though, because this is interesting. I don't hear a lot of people talking about this.
Yeah, so I thought it was see, the concept of dollar smile, right? It's this idea that which again goes back to the unique properties of the dollar, which I believe we are rapidly losing, which is that the dollar does well when things are really very good or really, really bad, right? So when growth is very strong, the NASDAQ is, it's a tech bubble, capital flows into the US, dollar rallies. Conversely, when there's a big risk off moment, the US used to be at least the safest place to park capital. So if you think about like geopolitical risk and the x-axis and returns on the y-axis, you have this dollar smile. I would suggest that the yen could behave a bit like that in the current crisis. So let's start with where we are now, which is the bottom of the smile. We're awfully close to that BOJ defended floor of 160, right? I mean, remember a couple of months back in January, the yen was at 160, and we had actually coordinated action. One, the BOJ was just setting dollar reserves to protect the line, and they have 1.2 trillion, by the way. So they, this is not like Bank of England against Soros. You're not going to break them. No single entity can break the Bank of Japan at this point. And also we had the Treasury. The New York Fed actually called dealers to ask for quotes on the yen. Now, did they buy? Did not buy? I don't know, but just a very simple act of like, plus like, really, do you need to call? I mean,
well, they're sending a message.
Wow, this is like the second most traded currency pair in the world. Oh, really? Okay. So they were clearly trying to kind of make a case that the Treasury was behind that. So my idea is that this is kind of a hard floor at this point, and I don't see any reason why that would change. Like, so changing would mean, having a stronger dollar. That's not what the Trump administration wants. I mean, the Trump administration, we want record S&P. So for that, we need record profits. So that means weaker dollar, and we want strong nominal growth before the midterm. So I don't really see the U.S. administration kind of trying to get a strong dollar back. On the Japanese side, that the inflation is really getting inbred. Like you look at the spring wage negotiations, like 5.3%. The oil shock in Japan is way worse because it's not just an oil shock. It's the oil that they buy is benchmarked of Dubai, which because of the whole Strait of Hormuz is a $20 premium, and it's for them they have to pay it in yen that are worth 20% less. So the energy bill of Japan is up by 100%. So you can't really, I don't see any of them kind of blinking on that floor. So that's the bottom of the smile. And then, so let's look at the two sides. So one side is okay, peace deal, everything happens through. Obviously, Japan, South Korea, we see massive rally across Asia because Asia gets all of its energy from the Middle East. And then we kind of go back to fundamentals. Why, if you look at fundamentals, any charts you look at, I mean, Japan, it's way too cheap. I mean, I did this calculation, purchasing power, adjusted it. Since 1995, the yen has lost 75% of its value. That's kind of insane. Like, you'd expect to see that with the Colombian peso or the Indonesian rupiah, not the Japanese yen. Like, it's not like there's been, the nuclear bomb falling on Japan is still pretty much the same large advanced economy it was 40 years ago. So clear that case, I think most people would agree. I don't need to spend much time on it. The part that I might be more surprising is I'm kind of thinking that if this maybe not escalates, but kind of stays in this fog of peace or fog of war, where some ships go through, some don't, you can never tell. The ships that are going to go through are going to be the Japanese ships, and that's something that I think most Americans don't know, is Japan and Iran have very good diplomatic relation, and you could see that from the very onset of the crisis, when the IRGC came up with a list of friendly, non-friendly countries. So it was the ones that I would expect, that you would have expected, right? So the Muslim nation that have been historically close to, or China, obviously you'd expect that. And so why is Japan on the list? Japan is like, it's in the U.S. camp, right? They got military base, and they weren't there. So I ended up researching a little bit about that, and I found this interesting precedent. Almost the same story. So it was when Mossadegh, the nationalistic prime minister of Iran, nationalized the oil fields, which at the time were owned by BP, which were Anglo-Iranian at the time. It was big English interest. The British tried to do what we're doing today. They tried to blockade the Suez Canal in the 1950s, and the ship that broke that blockade was a Japanese ship.
Ooh.
And that kind of created this weird relation throughout the Shah period, the Islamic Revolution period. Japan and Iran have been very close, very tight. There's a long historical culture thing, and you see that today. So I'm thinking if this kind of morphs into which I think is where we're going. I mean, I'm hoping we're not going to the hot war. I'm hoping this is kind of this awkward thing where it's not really open, it's not really closed, and we keep kind of like, one day it's 10 ships, one day it's 20 ships. There's only one country that can really that has a good grace of both the Iranians and American, that would be the Japanese. So, and then the last argument would be these trove of reserves they have. $1.2 trillion in dollar reserves. If you divide that by the 3.5 million of oil that Japan consumes every day, even at a price of 100, you have over 10 years of energy imports from these reserves. So they have an ability to defend the currency that no other sovereign has.
Amazing. I really have not heard that on many people's radar. If anything, I think they were thinking, does it have implications for the yen carry? Everyone was so worried about the yen carry trade blowing up, and that.
By the way, that's good for the yen. I mean, for my call, if we have a yen carry trade blow up, that means the yen goes up, and the Brazilian real, Mexican peso goes on.
Do you think the market's positioned for that at all?
If we do have if we do have what I fear, kind of a really ugly scenario, not just one ship here, one ship there, but like we go full in and we send the boys, and it's like Vietnam on steroids, and the Iranians blow up the desalination facilities, and we their bridges and all that awful stuff. Obviously in a risk-off moment, the yen is one of these things. Like you got what the yen and the Swiss franc, right? That's only non-dollar currencies that would do well in that scenario. So again, that would be the really ugly part of the yen's mind.
Do you think anyone is prepared if it is that? I mean, I had a conversation earlier today with somebody who's very concerned that the administration will do what they say. They will take out the bridges to cut off the supplies coming in, and they will take out the energy infrastructure and deal with the aftermath, and that it's not a crazy man's bluff, that it is actually a scenario on the table. Does it look like anywhere the market is prepared for anything like that?
No. And I mean, I wouldn't be my base case. I think, intentions, right? Certainly, I do believe Trump wants to chicken out. He sees the polls. He sees it's terrible, but it's not that easy. I mean, I would not put it at 0%. And again, look at the movement of troops. The movement of troops at the end of the day tells you the reality that at least the administration wants that option on the table. And then also keep in mind that war has its own logic that no actor can control it. One great book on World War I. It's I think it's called The Sleepwalker, and it goes around this. Like no one thought that the assassination of the Archduke Francois Ferdinand in Bosnia, which was a kind of normal Balkanic crisis, like there had been 50 of them before, no country really wanted this. When the French went to war, they didn't attack. It was in September. They didn't pack winter clothes because it was so. Even when the war started, it was sure it was be a 2-week type of situation. Same thing when the U.S. started the Vietnam War. It was always, and you could see some of that rhetoric too. It's like we just need that one next victory. That one. If we get that island, then they'll give up.
I think you could argue that happened with Russia and Ukraine too.
Exactly. The Russians thought it was going to be a 2-day. They would walk onto the palace in Kiev, and Zelensky would jump into a US helicopter and it would be done. And then we're what, like 4.5
Mm.
years in, and
Mm.
close to 1 million people have died. I mean,
Yeah.
it's certainly not a zero possibility. And yes, the market is pricing absolutely zero chance of that.
Which makes me nervous, and I hope we are wrong, and I hope the market is right. I think we all do. But when you're evaluating your risk and how much you can tolerate, I think this has to be part of the conversation that you have, even if you're the most optimistic bull. We're out of time, but I want to flag another. I teased on exit. We're going to talk about it. We're not going to have time this time, but we'll come back and we'll do it again. Vincent, you wrote a fantastic note. It's a little bit of a longer view, I think it's fair to say, about why you are a secular bear. And we hear people talk about the fourth turning, but I think you tackled it in a way that is super interesting for people. And you kind of break it up as the end of human intelligence bubble, the end of the democratic bubble, the end of the West's moral and technological exceptionalism, and then the secular bear market for US stocks and bonds. I mean, it's not uplifting reading maybe, but I think if you want to sort of, resilience test your portfolio, it has to be something that you think about. But I love the concept of the end of the 500-year human intelligence bubble. But we'll have to talk about it next time. But I encourage everybody to check out Vincent's work because it's some of the best out there. Vincent, thank you so much. Always such a pleasure. You always make me think about things in a different perspective.
Well, thank you, Maggie. And I hope to talk about it soon. And thanks again for the kind words.
Yeah, we hope to talk about the end of us all, the end of the bubble. But knowing you, there's some optimistic threads in there. So, all right. Thanks everybody who joined us live. Appreciate you. We'll be back on Wednesday. In the meantime, take care and good luck out there.